Hi guys. For those that you're already on, just making sure you can hear me. And just checking the chat working. Just pop in the chat that you can hear me. Perfect. Thank you. Right, I'll be going in a second. Couple more joining. It's nearly 12. Well, let's get cracking anyway. We can catch up. Right then. On this workshop. Oh, hang on. Microphone just changed. Turn that back. Right, yeah. Thank you for joining me on this workshop, how to put your life cover and sick pay on expenses. So first of all, I'm going to explain my aim, but I'd love to know what your aim for this workshop is. So please pop in the chat what you'd like to get from this and what you'd like to learn. That's really interesting to know. So what I'm going to do, I'm going to just provide as much information and guidance as I can. I'm going to keep it really simple, though. I'm not going to go really deep into it and into too much depth and bore you to sleep. Hold me to account. Let me know if I'm not done that. If you need anything explaining, at the end we'll do. If there's any questions, we'll do that at the end. There is a Q&A box. If you've got any questions, pop them in the Q&A box and not into the chat if you don't mind, and then we'll go through at the end. So a bit of a session overview first. We're going to look at 3 different areas. So why we actually need cover in the first place. Why is it important to not leave it till later? What are the risks? And then we're going to look at how you can use your business if you've got a limited company and how you can actually save tax in doing so. So who am I? As you can see, I'm Raj Bogan. And what I do is I help and advise limited company directors, limited company owners with tax efficient ways of setting up their life insurance and what I call sick pay cover. Some or a lot of the challenges that you all face, or we all face as business owners, I completely get because I'm a business owner myself and I go through similar challenges myself. You know, I've had the struggles in business with sleepless nights and stressing and worrying about things. And I became a financial advisor. I've been doing it now for like 10 years, and I've learned so much in that time, including a couple of ways in which you can put your personal insurance, personal cover on expenses. Most people aren't aware of this, and many out there don't want you to know about it. So I'm here today to sort of help you learn the secrets that they don't want you to know. Quick disclaimer, but very important one. Nothing that you hear or see today is actually any financial or tax advice. It's purely for information. But please make sure you do speak to me at the end so I can help you get these products set up if you want, if that's what you want. They can't be arranged without an advisor, and the consequence of getting it wrong can be very serious. I'll explain how you do that at the end. So why do we need cover in the first place? Well, because we love and care for our families, don't we? And we want to be responsible, not put ourselves and our families and our businesses at any risk or danger financially. Now, why on earth would you purposely leave your loved ones in financial limbo? Well, the matter of fact is you would never do that on purpose, would you? But usually it's for one of like a few reasons. Either it's we didn't make time for it, or should I say we didn't prioritize it. It's something that we don't really understand. Maybe it's something we don't understand, or it gives us a headache and it feels too complicated. So we just avoid it completely and don't think about it. Or we just don't think it's needed. We don't think it's important. And I would say in a lot of those cases, I guess we just haven't connected the dots in our mind and we can't see the risk that we're facing. And I think that's down to having something called optimism bias, which I'm going to come on to in a second. And I guess it's because maybe we've not perhaps been off work that long in the past, or we've always been fine. And that's the only thing we kind of see. We keep getting up every morning and the same thing happening over and again. We can't seem to picture things necessarily going wrong. It's a bit like now the temperature is getting colder. It's almost like, you can't imagine it being really hot again wearing your shorts and t-shirt, and vice versa in the summer. You can't imagine it being really cold if it was snowing or something. What I would say is just have a think about COVID and how for so many, their income just immediately stopped out of nowhere. No one saw it coming. If it wasn't for the furlough scheme, I mean, I know that was for employed staff, not for business owners, but how that saved so many and how much worse it would have been. Well, think of some of this insurance, particularly the sick pay, as that furlough scheme, you know, and what would happen to you if you didn't have that in place. So in terms of reasons to cover, you know, if we're talking about life insurance, as I would call it, death insurance, because that's what it actually covers, then it doesn't actually benefit you. It's not for you. You're doing this for someone else, which is why I'm talking about responsibility. So if you're single, for example, and you've got no dependents, then you don't actually need life cover. The only exception to that might be that you need some business life cover, where maybe you've got a business partner or partners, or maybe the business is larger than just you and you've actually got staff and the business itself will be affected on your death. Otherwise, life cover is to help those loved ones and others financially. What I want for all of us, I should say, is to make ourselves financially resilient. And that's to build a fortress around ourselves, ideally to weather any storm. The main reason we all get up and go to work each day is to earn an income, isn't it? Well, today I want to show you ways that you can ring fence that income regardless of what happens to you. Another obvious reason is we don't want to be kicked out of a home. If you can't keep up payments on your mortgage, you can get repossessed. And also, we work really hard, don't we, to build our businesses. Business is not easy. Making a living is not easy. Surely it makes sense that the business itself can withstand financial storms and challenges. I'm going to touch more at the end how the business can protect itself. One key point I just want to touch on is if the business stops trading and that is your main source of income and wealth, then what happens next? So now, bearing in mind the above, I just want to give you a quick scenario. Let's say, unfortunately, you become unable to work because of, let's say, an illness. After a while, the business unfortunately runs out of money and it can't pay its bills, and that's obviously including paying you. So unfortunately, the business has to stop trading and it goes bust. Now, as the business was your main source of income, as I've already said, it's now going to start to affect you personally. You're going to start to struggle and you can't pay your own bills, including your mortgage or your rent. And you struggle now to put food on the table. This is all while at the same time you're suffering from this illness. And the financial stress is actually making your illness worse and not giving that time to recover. And unfortunately, before long, the bailiffs come round and take your house, so the bank have now repossessed you. And actually, going forward, it's also likely that you won't be able to be a business owner for quite a while, as you won't be able to be a director again for quite some time, which means you're probably going to have to go work for someone else. And that's the reason a lot of us go into business in the first place, is to work for ourselves. So I don't really want to continue the story, as I'm not really sure how how much worse it can get. But it's a disaster on every level, isn't it? And none of us want that. I don't want anyone to be in that position. So let me paint you a slightly different picture. Let's say you're smart enough to take out some cover. You became seriously ill and you're off now medium to long term, unfortunately. But you've insured your income so it can continue to come in. You can pay yourself personally, you can pay bills, pay mortgages, no bailiffs to worry about, there's no stress. And you can take the time necessary to improve your health, and you don't have to keep rushing back to work and making it worse, which is the main thing. But equally, the business can continue to trade and be in existence, and then you'll have something to come back to when you recover. There's quite a big difference in outcomes, and I would just say to you, why take the risk? So speaking of risks, what are the actual chances statistically of something horrible happening to us? So here we've got a risk report, and I've actually done it under my name. You see on the left-hand side, my wife, Rena, has very kindly agreed to use her details as well. And as you can see in the picture, it gives the top, the grey part, is all of them. It gives a percentage chance of certain things happening. So the top part, the grey, hopefully you can see it okay, is of dying. Second part is having something called a critical illness. Critical illness is like, the best example I can give you is a cancer, heart attack, stroke, or other common ones. It's not about you dying from them, it's just about them occurring. And then the last one is the chance of you being off work for 2 months or more. This is, it does say on there, but this is till age 70. So I'm 40 at the minute, just so you know. We all know death is obviously certain, we just don't know when. Now you can see from the chart, from the graph, there is a much bigger chance that you'll get seriously ill or be off work for at least 2 months. And just to point out, the 2 months is at any one time, and not just the total amount of time you might be off between now and 70. My question to you all is, do you know someone who's had cancer, example? Like, let me know in the comments if you're willing to. I do. I've had people know die from it. Do you know someone who has died who is a similar age to yourself? I lost 2 cousins last year, or over the last year or so. One 39, one 50. Do you know someone who has been off work long term? And long term to me means sort of months and years, not off for a week or two. My brother, when he was 22, got something called lupus and was off for like a year or two. And to be honest, has not really been able to go back to work properly since. So that type of policy replaces your lost income. The one I'm referring to as sick pay. It's in the industry, it's called income protection, or as I like to call it, like I said, private sick pay. The average claim length is about 8 years. Now, the question to you is, could you survive without an income for 8 years? I mean, I know I couldn't. Oops. Right. Some more lovely statistics coming here, ones that we all want to hear. Cancer cases, they're projected to increase to over 500,000 a year in the UK by 2040, which is up from about 380 odd now, or this statistics are a few years old. Also, 1 in 2 of us will get cancer at some point, which is obviously a very scary statistic. It does say there as well that survival has increased double since the 70s. So say you've got life insurance, you think, oh, if I get cancer and, if I die from it, my family will be looked after, or my business will be looked after, which, yes, if you die, but if you've only got life insurance, it's not going to pay out if you don't die. So I talked before about optimism bias. Now I'm going to quickly read out a definition. The tendency to overestimate the likelihood of positive outcomes and downplay the possibility of negative ones is called optimism bias. While an optimistic viewpoint can be helpful in motivating people to take chances and pursue their dreams, a dose of realism about the risk involved can make success actually more likely. Now, I mean, how true is that? I mean, the image on the right is so accurate, isn't it? In pursuing a goal, you are much more likely to achieve it I think you are, if you realize that the road ahead is going to be difficult and challenging, so that you can actually prepare your mind for anything and you're much more willing to fight. Because so many times we get really excited about certain things or a goal, and then we go in pursuit of it, and then reality hits, and people give up because the reality didn't match their expectations. Excuse me. The message I'm trying to get across today is to be prepared and not let your optimism bias or your expectations sabotage your future and leave yourself, your family, and your business at risk financially. Look, like maybe you've already got cover, which is great, but I would say to you, get it reviewed and check it's still fit for purpose, and then review it on a regular basis. So what are the top, some of the most common mistakes people make? I would say first of all is not having a cover at all, obviously. The other one is what I call DIYers, people trying to actually do it themselves, not getting professional advice. I'm really not sure why, people don't get the advice, maybe some sort of skepticism, I don't know. I'll just give you a quick example. I remember I had a meeting with a young couple a few years back, and I'd explained the different options to them and given them my recommendation. So they went away, have a think about it, they weren't sure. So they came back to a second meeting and they'd found a much cheaper option online. And I can't remember the exact figures of the monthly premium, but I just thought that doesn't sound right at all. I spotted it straight away, which they didn't. I said, do you mind if I just have a quick look at it? And they said, yeah, of course. And I said, look, the reason it's cheaper is because there was like 2 or 3 parts to the cover, 2 different policies within one. One of them, it was because a 0 was taken off one of the cover. So I think it was like, we were trying to cover the mortgage balance, which I think was about 130 grand. And they'd done the cover for the critical illness at 13. So one of the zeros had been coming off. Now, can you imagine going to make a claim on that? You go to make a claim thinking you're going to get this amount of money that can help you pay off your mortgage and you don't have to worry financially. And yeah, they're going to give an absolute tiny portion, which ain't going to make much of a difference. And I know it sounds obvious and you might think it's an easy mistake, but as an advisor, I spotted that straight away because of the monthly amount, not just checking the numbers. Anyway, so that's one of them. And another one, this is a massive one, and you'll see in some of the case studies, examples I'm going to go through in a minute, that this is so common. And that is, I've already mentioned it, that once people have got cover, they're not reviewing it. And to be honest, a lot of advisors can be blamed for this because they're just setting up policies and not getting in touch with the clients. You've got to review stuff regularly. And I would say regularly is at least once a year, just having a quick check-in to see if it makes sense. There's no point setting it up, even if you do it correctly and then reviewing it regularly, because your circumstances will probably change. Whether that be your income's changed, whether you've had kids, whether you moved home, whether some sort of big change in your business. There's no harm in sitting down and reviewing it, ideally with your advisor. The consequences of not doing that are it's not fit for purpose, you've not got the right amount of cover, the right term, and arguably you're just wasting money. What's the point of it? Another thing that a lot of people are not aware of is putting your life insurance element in policy into something called a trust. What does that mean? It means three things, essentially. It means that the right amount of money can go to the right people and at the right time. Right money means there's no inheritance tax, so the government can't touch it, because a trust falls outside of what you call your estate. It's not owned by you. The right money means you can select who you want to have the money, and like I say, it goes to who you want it to. And the right time means that you don't have to go through a process called probate, which can take 6 to 9 months, and you can get the money, or not you can get the money, but your family or your beneficiaries, whoever you want it to go to, can access the money straight away, which is, of course, crucial. Another one is having a personal policy when you could actually have a business one. I mean, that's part of the reason what I'm doing with this workshop today. Is it really a mistake if you're not aware of it? I guess not, but this is, I'm trying to raise awareness here. And I think one of the worst things, one of the saddest things, if and when it does happen, is when people are working too hard, like I said before, not prioritizing it because it'll never happen, or the other more important things to do, not making the time to sort the cover out, working too hard, and then they become ill, and of course by that point you can't get your cover in place. But it's actually because you've worked too hard and stressed yourself out that caused the illness in the first place. So why do something? That all sounds good. You might be thinking, yeah, I can see your point, and I think I should maybe do something, or get a review booked in, or get some cover. But I'll get to it later on, or when I've got time. Why is it important to sort this now? Well, I'll just tell you, it's up to you, but I'll just tell you the risk that you face when you leave it till later. So if something happens to you, then you may not get cover again. You may get exclusions. You may get something called, maybe what we call postponed, which means they're not going to look at any cover or any new cover pending any investigations, tests, biopsies, etc. that you may have to have, or maybe operations, whatever. Excuse me. So I mentioned exclusions. What does that mean? Exclusions mean they will exclude certain pre-existing medical conditions. Let's say, for example, you've had recent mental health history, example, depression, and you've had to take some time off work, or you've been on medication, or you just had it. They will typically exclude that from any income claim, income protection claim for mental health. So even if wherever you're at now, whether you've got no history, you've got something, whatever, if you're leaving it, you're risking things happening in the future that could then exclude you. Now, I want to just talk about my own example of how my situation and things can suddenly change. There's a picture of me there. I've taken to the hospital. I went to last December. I went to an A&E with a light pressure on my chest, which I've been feeling. It wasn't a pain, but it was a light pressure, which I've been feeling for about a couple of weeks, mainly at night time, only for sort of, not all through the night or anything like that, but occasionally it would just wake me up, or maybe when I was trying to go to sleep. I thought, that's odd. It's probably nothing. But then it kept happening, and I thought, something not quite right there. Then one afternoon, I remember it was a Thursday afternoon, I'd had 3 back-to-back appointments on Zoom, which is probably not a good idea anyway. Should have had some gap in between. And afterwards, I went, I worked from home, and I went into the living room and said to my wife, it's there now, constant, doesn't feel right. And it was there most of the evening. I was getting a little bit worried now. And in the morning, I should have done something then, but in the morning, I thought I'll sleep on it, see how I get on. In the morning, I rang 111. I didn't really want to go to the doctors because I thought they're not going to be able to do proper scans and stuff. So I just rang 111, I told them, and they said straight away, go to A&E. So anyway, I went to A&E. I was worried about my heart, and it turns out I had a tiny blood clot in my lung, which, if you're not aware, if left untreated, it can be fatal. I mentioned before about a cousin of mine this year, 50 years old, died. He died from a blood clot in his lung. He just found in his bed one morning, passed away, unfortunately. I think that's partly to do with being on a long flight, but still. Now, look, I look after myself, or feel like I do. I run 5 times a week. I go to the gym the other days. I eat well, don't smoke, I hardly drink, by choice. And also, I've never had any medical issues. So anyway, they gave me blood thinners for 3 months, and then they said they review it, and then after that they've said to me they want me to take them for life, which I'm not necessarily pleased about, but that's what I've got to do. They explain the risk to me. Some of the risks are that I'm male. I'm 40, so that's relatively, they say it's quite young. Others might disagree. And also a family history. My dad, my uncle, and both my brothers have had clots in the lungs of the legs. Now, look, I've already got cover, but like I said before, it's really important to review your cover annually. And this has meant for the past, 9 months now, whatever it is, I haven't had a chance to review my cover because, first of all, the insurer said for 6 months, we're going to, remember I talked about postponement, we're not even going to touch you until you kind of had this for 6 months and see how it goes. And then it took ages for an appointment, then they did more blood tests, and then I had to go back for that, and that was 2-3 months later. So I've only just been discharged just recently. Now, I'm lucky that I've got cover. Obviously, I do this job, so I know what I'm doing with it. But equally, I'm lucky that it wasn't worse, and I can still increase cover and make changes. Even now, some insurers will not give me what you call standard rates. Now, just imagine if my condition was slightly worse. In fact, even just a little bit worse. And I didn't have any cover, or my existing cover was no good because it hadn't been reviewed in a long time. Now, I may not be able to get cover again, or it would potentially cost me a fortune. Without this sounding like arrogant, just because I do some exercise and stuff, if this can happen to me out of the blue, then who's to say it can't happen to you or somebody who's close to you? Other reasons, who the heck wants to pay more money? On average, premiums go up about 15% per year. So every year that you leave it, it will cost you more. If you're going to say, I'll sort it out later, I'll sort it out later, sort it out later. But not only will it cost you more, like I've always said, you're increasing the risk of something happening for 2 reasons. One, you're getting older. And 2, time is ticking by. And then it's sod's law, isn't it? That thing that you've left, that risk that you've left exposed, it's just sod's law. It's just the thing that's going to happen, isn't it? So just a little bit about products. I'm not going to go into massive depth. What types of policies are out there? I think most people have heard of life insurance, or as I call it, death insurance. That's what it covers. Then I've mentioned some of these already, to be honest, but there's the policy name is income protection. I call it private, and it's permanent sick pay because that's what you got. You're off work sick, whether it's illness or accident, you get paid. It's an amazing policy. It can cover you, like I said, sickness, accident, disability. It's an amazing policy, and you can make multiple claims on this policy throughout the life of it. They're never going to raise your premiums like you would with car insurance, for example, just because you made a claim. And in my opinion, it is the most important insurance that out of all of these, but out of any insurance that you have, because if you think about it, it ring fences and protects the very thing we go out to work for, which is income. How are you going to pay for all the other insurances, your pet insurance, your travel insurance, home insurance, car insurance? How are you going to pay for all that without your income, without your money? And the final one, I call it cancer cover. The industry calls it critical or serious illness cover. It's just industry jargon. The reason I call it cancer cover is because you can get a lump sum. If you have a cancer or certain other conditions, they give you a lump sum tax-free that can be used to pay off a mortgage, pay off other debts. You can use it for whatever you want. It can help sustain living or getting through the illness for a year or two, or however long it might take. 2/3 of claims in the industry are actually cancer related, so it is the most common claim. Like I said, other more common claims are heart attack, stroke, MS, but there are actually dozens of conditions that you will be covered for with a policy. One interesting one, not really nice to think about, the 5th most common claim is actually children's claims. It's actually children getting unwell. Now, you can insure your children as a small and cheap add-on if you've got a policy, which I strongly recommend. Why would you do that? Well, let's say you've got policy and you think, I'm completely covered now if anything happens to me. But if your child gets unwell, then you may have to take time out of work to look after them, take them to hospital, etc. And your insurance is not going to pay you because nothing's actually happened to you. So that could help you financially in that time. I'm going to give you a case study now. Jeff, how I helped protect his family and his business. So Jeff came to me after seeing one of my videos online, as he didn't realize he could put his family life insurance through his business. He had some existing cover, but hadn't reviewed it in years. So I had a look at it, and like I said before, a lot of people do this. It just wasn't right. He's putting himself, his family and business at a huge risk if something happened to him. So what I did for Jeff and his family was get the right amount of cover. It was for the right term. And we were also able to put it, or a lot of it, through his business, so it's tax efficient, so he's saving tax, he's saving money as well. What's the actual simple result of this? It means that when Jeff dies, his wife can pay off the mortgage, which is great. She doesn't have to worry about that. He had that in parts before, but it wasn't the quite the right amount. It wasn't the full amount of mortgage. What he didn't have, and what I set up for him, was making sure there's some sufficient money for the family now to live off, because Jeff was the main income earner. His wife, Catherine, didn't work. She's looking after the kids. And now Jeff is not going to be there to provide an income. So this is very important. You have to remember it's income that is lost when someone dies or can't work. So that's boxed off, that's ticked. Then Jeff had built a really good business, but we realized that if he had a serious illness or an accident and he couldn't work for any reason, physical reason, mental reason, then he wouldn't, and the family wouldn't receive any income because he stopped working. So what is it helped him create a private sick pay policy, meaning he didn't have to worry and his income was ring-fenced. How? The insurance company would pay a monthly income to Jeff's company, in this case, while Jeff was off, and then the company would just pay Jeff as normal. This is a tax-efficient way, and which I'm going to explain in more detail shortly. And by paying the monthly premiums, the company saves tax as well. We also then established that he had a key member of staff, Dave. The business would really struggle without Dave, and the income and the profits would be affected. So we set some insurance up for Dave as well. One, this is an employee benefit for Dave and his family that the company is going to pay for. Similar thing as we set up for Jeff, some life insurance and some income cover. But also we set up a separate policy that protected the business itself, and then meant that the business could keep trading and not lose its profits if Dave died or was off work. Simple, right? So what happens if Dave is off? Well, like we mentioned, he will receive a regular income paid for by the insurance company, so he can pay his personal bills, but also the business itself is compensated for the lost profits by Dave being off work. It will also get some money to hire a short-term replacement for Dave if necessary. And I should have said, in fact, not only did we insure Dave, insure the business through sort of Dave, what happens to business for these events, but we also insured Jeff as well, because he's the main person to business and contributes even more to the profits than Dave does, of course. Excuse me. So I've got some stats on the screen about life insurance. I'll let you read them. Hopefully you can see them clearly. But the main point of these stats are that not enough people have got insurance in place. And like I said before, it doesn't show it on here, but not enough people, way more people are not reviewing it. And that's what I see all the time. The stats for income protection, or as I call it, sick pay, are even lower. Why is that? I think it's awareness more than anything else. I think that's part of the reason what I'm doing today. Is helping raise that awareness. And like I said before, I think it's the most important insurance you have because it pays for everything else. Just another stat there, just kind of re-emphasizing my point about not reviewing it. It says almost 13 million people at risk with a wrong level of cover, leaving them vulnerable to bills in case of ill health or death. And that's because they've got what's saying is they've got cover, they're just not reviewing it. Right, another example. How we've got Rachel here. How we help protect her income, her business, and her dad, which might sound odd, but I'll explain. So Rachel runs her own business, and she has a partner, a boyfriend, but they don't actually live together. One reason they don't live together is because Rachel's dad lives with her. He's retired, and previously he'd actually suffered from a stroke. She hasn't got any kids. She's in her 40s now, mid-40s, I think. And Rachel's dad has some pension, but he is partially dependent on Rachel financially. He can afford things like food and stuff, but maybe not. It certainly won't be able to afford like a mortgage and all the rest of it. So Rachel had some, like I said, she's in her sort of close to mid-40s. She'd had taken out some life cover just herself when she was about 18, but never reviewed it. She's got a mortgage with 24 years left. So listen to this, I'm going to ask you in a second. She's got a mortgage with 24 years left, but her current life cover only has 14. I'll say that again. Mortgage 24, current life cover is only 14. Can anyone pop in the chat? Can you spot the shortfall there already, the risk that she's got? If you want to pop them in the comments. I'll give you a second or so. Yes, Amy. So the shortfall is the term isn't long enough. The term of her policy isn't long enough. So it means that if she was to die, the policy will have expired. Sorry, start again. The amount was the policy would have expired before the mortgage finished. So there's a risk there that something could happen, and it's a risk obviously because her dad's dependent on her. So what we did a new policy that was specific for the mortgage amount and the term. So what it means is that if she died, her dad could pay off the mortgage and not be homeless. That's the key. I said to actually keep the existing one because it's so cheap, and what your dad could do is use that money to live off if needed once the mortgage is gone. The big thing, however, for Rachel herself was she had absolutely nothing for her if she couldn't work. So we set up one policy to protect her income. This was through the business. And a second policy would, so she would get a lump sum big enough to clear her mortgage if she had a critical or serious illness like a cancer we mentioned. Also, we set up another business policy. So if she got seriously ill, then the business will get a lump sum so it could hire a replacement for her if needed, and also protect its profits while she's off. There was also another business policy that a very small policy that protects a business loan that she had. So if she's off work, she had a cancer or something, and they made a claim, she could just pay it off completely. She don't have to worry about it. So moving on to section 3, I'm going to talk about the business cover and then how you can actually make the tax savings. Hopefully with some of the examples, you've got a flavour of how we work and how we can help people. And as you can see on the screen, I'll split it into 2 main sections. The main thing I'm going to talk about is the employment benefits section, or the life insurance and the sick pay, and how you use that through the company. I'm also going to, another area I'm going to touch on today is what we call business continuity solutions. Like I've just been mentioning an example, protecting the business profits, and then making sure the business can keep trading. Then there's ownership protection and insuring company debts. So business owners, look, we work really hard, don't we? We get very little back, and we're constantly getting taxed and penalised. Yet we contribute so much. We employ millions of workers and are the backbone of the economy. And we don't get enough support, and we're not taught about the various tools and tricks of the trade that can make life easier for us to save money. Everyone's talking about the cost of living crisis, but what about the cost of business crisis? Like, who is actually looking after us? Well, let me show you how to play the game where you can, always win. So the cards are stacked in your favor for a change. Quick question: does anyone on the call actually want to pay more than they need to? Well, of course not. So why, let's look at, why people not taking advantage of this. Well, the main reason is awareness, which is why I'm here today. So as you see on the screen, and we all know that we've probably all heard of this, there's only 2 sure things in life, isn't there? There's death and there's taxes. So let me teach you how to win on both counts. Now, obviously, I can't help you cheat death or stop death, but what I can do is ensure that your family and your business can, if necessary, can benefit if you do, and best of all, in a tax efficient way by using legal tax relief. So let me show you how to do that. First of all, relevant life plan. This is what I mean by life cover on expenses. It is life insurance for your family, but the company takes it out, and you, as an employee of your own company, it has to be an employer-employee relationship. And by the way, if you have other staff, other employees, they can have this as well. It might be as like an employee benefit. Maybe you could use that perhaps instead of paying them extra if they're asking for a raise. This then goes into something called a trust. Hopefully you remember I said trust before. This one's a business trust, and the beneficiary will be whoever you select, but it'll typically be your family. It's then paid out tax-free, so there's no inheritance tax. Simple. So that's one. And here's an example, of how you can actually save money. So example here, got on the left-hand side, we've got paying it personally. On the right-hand side is the relevant life plan. So it shows £1,000. Doesn't matter whether that's a year, a month, it's not relevant. If you pay it personally, if you look down the left-hand side, you've got all these different costs. National insurance, £34, income tax, employer national insurance. The employer in this case would be your company. Anyway, go down to the bottom. To pay £1,000, you've got to earn £1,589, so nearly £1,600. You might say, hang on a minute, Raj, I don't pay all that tax and stuff. I'm clever, and I pay myself a small salary and a dividend. Yeah, that's fine. A lot of directors do that. A lot of accountants advise that. Completely get that. But the point is, to pay the £1,000, you've got to earn more. It depends on your own situation. However, if on the right-hand side, you take a relevant life plan and the company pays for it, well, actually, you're paying £1,000 out of the bank account, but now the true cost is lower than that because the company saves tax. There's no personal tax to pay because you've not paid it to yourself. And the true cost is just over £800. So that this scenario, it's almost half price. So either you can even though it shows on the bank account as 1,000, it is in effect half price when you think about it. So either you get your cover at half price, or you could double your cover for what you're paying now. Like I said, your situation might be somewhere in between, but in every scenario you look at this, it's going to be much more efficient to do it this way. So, but there are some scenarios where you maybe wouldn't do it. For example, I was talking about this before about things happening after the event. So let's say you've got a personal policy already, but you've had some health conditions, meaning you might not be eligible for new cover. But that's the whole point of having a meeting with myself, and I'll just, I'll go through it and give you my advice whether to take a new one or leave it. Or, there's plenty of stuff I can do at researching different insurers and stuff. One thing I must point out is you cannot just take the direct debit from your personal bank account and put it into your company bank account. That's not allowed. For it to be tax efficient, you must have a relevant life plan, which only myself and a few others in the UK are licensed to advise on. It needs to be set up correctly to avoid the tax. 64% of business owners have never actually even heard of a relevant life plan, and only 25% have ever even implemented it. So you see what I mean about, they don't really want you to know, and nobody's really shouting about it, which is what I'm here trying to do here today. Who can have it? You must be UK resident. You must be an employee of a company, even if that's your own company, so that can include directors and salary partners. Who can't have it? Members of an LP, sole traders, and yeah, what was I going to say? Yeah, so, but if you're a sole trader, most sole traders won't have an employee, but if you have other staff, you can take out for them regardless what type of company setup it is. What are the key benefits? I think the main benefit there is, it's the saving you're going to make, both for the company and for yourself personally. If you have got staff, it can help with staff retention. Premiums are not classed as something called benefit in kind. Also, if you think, well, what if later on I'm thinking to close down my company or whatever, you can actually transfer it to your personal name or to another business if you set up a new business. So we've talked, moving on to the private sick pay or the income protection. If you run it through your company, limited company, there's a policy called executive income protection. This is like the equivalent of what we just talked about with the relevant life, but this is for the sick pay. Same concept as before about the company owning this one. You can, of course, have these in your personal name, which you may already have. This pays a monthly income to the business if the insured employee is unable to work. That includes, yourself, directors, whether it be illness or injury, any reason you cannot do your job. It's not specific like a critical illness policy. The business can use that money, to pay a member of staff, like I said, including you, so that you get a continual regular income into your personal bank account, that as you would as normal. And I think it's absolutely crucial and critical, like I mentioned before, about being able to continue to pay your bills and not have those risks associated. You can cover up to 80% of your pre-tax earnings. With a personal policy, it's 65. What can you cover? You can include salary, and most people then pay themselves in dividends. So you can include dividends. You can even include dividends that you pay your spouse. Like, for example, I pay Rena some dividends. So if I'm off, all the dividends get insured, not just what's paid to me. So that's crucial because her dividends would stop. One thing that's really crucial is what a lot of people do and what a lot of accountants advise is not just setting up a pension, but letting your company, if you own a company, pay your pension contributions. So it's the employer contributions. So you can actually insure those as well, meaning your pension long-term is ring-fenced, you're not losing out. And I think that's really massive. You can't obviously do that on a personal policy. Also, you can insure employer national insurance contributions. So if the employer, your company is paying national insurance contribution, you can insure them as well. That's another massive benefit of it. Who can be covered? Same as the other one. Directors, salary partners, any employee of the business. Simple. So those are the two main bits, and that's how you save. Hopefully that's made sense in how you can save money and tax. And with that, just going to talk about business continuity solutions. I've mentioned throughout with some of the examples about protecting the profits. Hopefully that's made sense about ensuring key people in your business, but I'll just touch on it. The business key people might be yourself, of course. You might have business partners. It could be managers, sales advisors. Or it might be someone who's got a really special set of skills that would be very difficult to replace if the income, if they became ill or were to die. the effect on the business profits, how long it would take the business to recover, and can it replace this person, and the insurance can protect the profits but also hire a replacement, either temporary or even a permanent one. A bit like the income protection, I think this is one of the main policies a business can have, because without the business making profits and sustaining itself and trading, how can the business exist and pay for everything else, including if you've got any other policies like your relevant life, your executive income protection? It's all going to go, isn't it, if the business isn't still trading? We're in business to make a profit, so it makes complete sense to protect it. This can be for any business, including just one-person businesses. Next is ownership protection, or share protection. What that means is if you've got business partners, or let me give you an example. So, like myself, I've got my wife as a business partner, but she's just there on the company. But if either of us die, we want the shares to go to the other person anyway, so that's fine. But if you've got a business partner who's not your other half, or they're not the person you want the shares to go to, then where's the money going to come from to give the family the full value of the shares if you die? If you don't swap shares for money, then what happens? Then hopefully your business is worth something, and I'm sure you would want your family to get full value for those shares. So either they're going to have to come in and run the business, which is unlikely because they've not got the experience to do so, the skills. Equally, the existing business partners are probably not going to want to deal with them, and vice versa. Usually the easiest and simplest way is just that the business buys the shares off the family. But what if the business doesn't have the money to do it? And even if it does it really want to drain its bank account, paying it out? So either it means that the family's just not going to get much, or not going to get the true value of the shares that you've built up, or the business might actually have to go bust or take on a lot of debt in purchasing these shares. The solution is really simple: is you just set up a simple life insurance policy that will pay out the sum required. It's a very, very cost-effective solution. It can also even include if one of the shareholders had to leave the business due to long-term illness. Another area I've touched on some examples as well is if the company itself has debts. Just like you would insure personal debts like a mortgage, it's important to include the company debts, and that can include directors' loans. Directors' loans need to be repaid immediately on death, so it's really important to look at those as well. Right, hopefully you have found that useful. So what next? What's the opportunity here? How do you go forward? It's very simple, like I've already mentioned. Book yourself in for a one-to-one with myself, and we'll discuss your individual and your business needs and what's best for you. Let you know what you need, but also what you don't necessarily need, and design and build your own portfolio. What you get is the cover in place that if you've been meaning to do it, get to reap the tax benefits I've talked about, and get the savings I was talking about. You get to provide you and your loved ones and your business with peace of mind. Like I said, your business, you've worked so hard to build it, so it makes sense to protect that as well. You get it structured correctly, and then put it into the right trust. What's the cost of this? There's no cost at all. That's not just the appointment. That's all the way through. You might think, why are you doing all this for free? I'm not doing it for free as such, but we get compensated from the insurer. That's only if you take out a policy. And we do all the work for them and give you all the advice. Like I said, I personally think it's really crucial to take the advice. There's no cost to you. There's no detriment to you by going through us. You're not paying more than if you went direct. How do you do it? Quite simple. I'll put a QR code on there, hopefully familiar with that. And then just take a picture of that. Not a picture, but take a QR code, and it'll take you to my diary. And from there, you can book a slot. It's first come, first serve, however. So I can only leave the diary open for a few days, and I have to close it because I want to manage demand from both from this workshop but from the other meetings that I've got lined up as well. Let's leave that on the screen for you and for a few seconds, and I'll ask you, are there any questions? Let's leave that there. I'm just gonna, But Amy just said, well, I'll leave that there. But Amy just said, does she have to cancel her existing policy to take out a business one? Well, it depends. If you do take out a business one, it'll be a new policy. Excuse me. And potentially, cancel the existing one. The example I gave of Rachel, in her scenario, it was actually fine to keep the existing one. What you can't do is kind of convert an existing one. Remember I said you can do it the opposite way around if need be. You can't do that from personal to a business one, unfortunately. That would be good. Kalyani, yeah. So are you? Can you see that you said you like to book an appointment? Can you see the QR code? Yeah. Are you able to put? Do you know how to use that without? I can. If not, I can put the link in the chat if you give me a second. Do you know how to use the QR code? And it should take you straight to. I've tested this a million times, but definitely does work. Let me get you the link. Just 1 second, mate. How do I do that? Bear with me a sec, guys. Right, I've just put into the chat the link. Can you just let me know that you've got that and it work, and you can just click on that link. There's not many appointments. There's some appointments already been booked. There's not many tons going. Can you just confirm that you've got that? All right, while he's doing that, John says, how much did I say the income can be covered? Right, yeah. So if you run it through your business, you can cover up to 80% of your gross income. So whatever's on your tax return. So if assuming you're a company owner, if whatever's on your tax return, whether it be salary, dividends, I mean, not many people pay until bonuses, but 80% of that amount that you pay tax on can be insured, as opposed to a personal policy 65. But some of the main benefits, as you saw there, is the main benefit is the tax saving that you make. So that makes it a lot cheaper. And then if relevant, you can insure your pension and the employer national insurance. Excuse me. But then one thing I must point out is that if you do run it through your company, is when this tax still to be paid when you transfer it to yourself, whereas a personal policy, it just gets paid straight from the insurance company into your personal bank account. That's why there's a difference in how much you can insure. But in most people's cases, I still think it's a much better option to run it through the company if relevant. Kalyani, have you got that now? Is he still there? Any other questions? Anything else that you'd like to know before we go? Yeah, Kalyani, you got it. Fine. Okay. Fantastic, guys. Thank you so much for your time with this. Well, you got some real value with that. Yeah. We'll see. For those people that have already booked or about to book, I shall see you shortly. I'm going to end the call now if I can figure it out. Yeah, thanks, Michael. Oh, yeah, thanks, Steve. Cheers, Lauren. Figure it out. There we go.